What's up guys, and welcome back to another weekly Studly Stocks Report. Yes, of course I missed last week. I was actually gone for emergency, but of course I am back with some more stocks news, and there's some news that I want to cover from last week that I didn't cover, but of course it kind of integrates into a little bit of today's topics. Now of course let's go into those topics right now. Of course, in the sides here we're just gonna go refer a little bit on Talos Energy, of course a company based on myself, my boys, Talos Energy. We're going to talk a little bit about AMC, Disney, and of course Zoom, and the big one, the big topic of course will be Sony and its possible partnership, if not already confirmed partnership. We're going to verify that in today's video with Discord, which is a great like little communication app similar to, I guess, Skype, but of course it's, I guess, more user friendly, is more based on gamers. You actually have a community base on Discord, and for one thing, it just feels more like a community than anything else. And of course it makes sense why Sony, of course even other companies like Microsoft, are interested in a company like Discord, but we'll talk about that later at the end of this video. Now of course let's go ahead and refer quickly into our boys Talos Energy. Now Talos Energy, for the most part, hasn't really done too much in the world of stocks. They're still floating around that $12-13 mark, but of course they're definitely keeping the energy up. And my face is covered, fantastic. Of course we could change that real quick, like so. But of course, as you can see, obviously it's a great company. It's maintaining itself, but I don't think they actually pay out any dividends, so they're not a super significant stock here. But I do want to refer a little bit to our other stocks that's on the massive low this week, and that of course is our boy Neo, and even our boys at Tesla. Now this is our boys Tesla. They were sitting as high as 668, went as low as 562, and it kind of went a little bit up today on Friday, but yeah, it's super low. And I just want to do a quick look in to see why it might have went down. Also Neo of course is in the same boat, also not as bad I guess as Tesla, but definitely the same kind of similar, you know, movement, if you will. But let's let's find some little details on these two companies to see, is it worth buying now? All right, this is a news from CNBC. Tesla closes below $600 for the first time since December. That's huge. It's very huge. Here's what's weighing the stock down though. The sell-off comes amidst a bigger drawback in tech stocks, which is valued based on the presumption of heavy growth in future cash flows. Competition and parts shortages are also playing a part. Obviously, big negative there. Of course, if there's no parts, you can't sell the cars. If you can't sell the cars, you can't make money. And that is of course bad for investors. It reads here, on Thursday, Fed Chairman Jerome Powell says that upwards pressure on the prices and transitories, I think that's how you pronounce it, increases in inflation might be coming to the US as the economy reopens following a year of COVID restrictions and hit businesses across the board. The market is now worried that interest rates will climb and the Feds won't take aggressive policy actions or even be able to control it. Bond yields are surging. Yeah, obviously it's not just affecting Tesla, but it's also affecting Apple. It's affecting Netflix. Pretty much a lot of the big tech companies. Google, I'm pretty sure, is affected to some degree. And as mentioned, of course, competition is of course going to affect Tesla as well. As you guys know, GM owned Cruise, Amazon's back Rivian, which is not based on our boy Rivian, but of course Rivian is on there. Other companies like Ford, Volkswagen, even Porsche with their own performance EV, the Taycan. It's not quite mentioned here, but of course Neo is also in that grouping as well. Now, the reason why they're probably not too much in that grouping is because of course Neo is not available to be purchased in the US market yet in terms of the car itself. But once they start spreading across Europe and of course in the United States, we might see more of a heavy foothold in that industry as they try to grab a little bit of that Tesla market share. But the big one, of course, is the shortage here for parts. Basically, semiconductor shortages have caused most automakers to temporarily close some lines at their factories, and Tesla is no exception. He said it was shut down for just 2 days, but it did not make clear whether partial shutdowns on some lines would continue. And a big caveat here, of course, if Tesla does not produce a high volume of vehicles due to parts shortages or lag time shipping parts from overseas to the US plants, the company will not generate as many regulatory credits that it wants to. And of course, like I said, that also extends to our boys at NIO, but you could definitely see the negative impact of that in these past week. Honestly, if you guys are able to, this is actually a great buy, because as you guys have seen before, it can climb up to $700, $800. It's just right now it's on that little downhill. A lot of people are losing faith in the company. A lot of people are not believing on the near future of it, but as a long-term investment, it could actually benefit you. But of course, it is expensive, not gonna lie, which is why I always recommend an alternative, which is NIO. NIO, of course, is only $33 right now. Super cheap for the most part, and it can reach 60 and above. So it's just a matter of those parts. And of course, when NIO eventually branches out into Europe and of course United States. Of course, I am not a financial advisor. I can't tell you what to do with your money, but of course, that is one approach someone can take in this industry. And of course, with that being said, we need to thank our sponsor for today's video, someone of course in this industry, and of course we love them. It's called Public, and Public Stock is an investment app right in your fingertips. It's a community-based app. You can actually interact with other investors in your similar niche, see what they're investing in, see what they can invest, and give advice of why they invested into it. The community in there, very friendly, very knowledgeable, and of course if you use our affiliate link down below, you get up to $50 worth of stock, and that stock could be anything from like Tesla and of course Amazon, Apple, any of the top industries right now, and of course any of the stocks that we're going to be talking about in today's video. Then check out the affiliate down below. It also helps the show out, and of course we thank you. Back into the main topics. Now, going into our next topic here is of course AMC. Everybody knows about AMC. They went super high because of the meme stock with GameStop, GME stocks, and AMC was kind of a part of that. And it looks like they're doing quite well this week. Let's kind of flip to the chart real quick. They were kind of flowing right around the $9 mark and spiked as high as $14. They kind of dwindled a little bit today to the $13 mark, but of course that's still really good compared to where it was. Let's look at the 6-month history here. Obviously it was sitting as low as $3 at one point. This is when it really spiked up to like $20, and it kind of went up massively down because of the controversy with Robinhood. You guys know about Robinhood. And then it's slowly been climbing back up and going. It's definitely a massive roller coaster ride. And right now it's sitting right pretty at around $13 per share, which is actually really good. And the reason for that, of course, is people are going out more. Movies are finally coming out in theaters. There's actually one particular movie coming out only in theaters. That movie being Venom 2. Only in theaters. It even has a little like tag there in the actual description, in the poster, movie poster. That's only available in theaters. I'm actually super excited for that one, and the way the trailer was presented, of course, it's going to be interesting to see how that goes into meshing that into the Marvel MCU, because of course Sony has been a lot more lenient in terms of releasing some of his IP, especially for the Spider-Man side of the house, into integrating with the MCU. And of course that's going to be very exciting to see. Potentially, I'm not sure if it's going to be in Venom 2, but potentially have Tom Holland and Tom Hardy together as one. That'd be really cool. Now, if you guys haven't already subscribed, we also talk about the entertainment news here in the Study Boys community channel. Definitely subscribe, definitely check it out. My boy Chrisor talks about a lot of entertainment news. He hosts that show, the Study Movie Hour, which never goes over an hour. And of course, guys, definitely check it out. We have a link right above me. Obviously, it was a great episode, and we'll definitely talk more entertainment news here in the Study Boys community channel. Now, let's go back into the actual investment side of it. Now with AMC, of course, let's go in to see if there's anything else that might be driving it, but I'm pretty sure it's just more people are vaccinated, people are going out more, people are exploring, people are watching movies movies. Movies are finally coming out. Even with the Disney news that came out about 2 weeks ago, they're really pushing people to get back into the movie theaters. There's a little scene that they presented where basically Captain America got the hammer and he basically said, Avengers assemble. Super, super amazing. And I can't wait to see more movies coming out. There's still some movies that go with the hybrid approach where basically some are movies and of course others can also get it from HBO Max or Disney Plus or something like that. But for the most part, they're definitely trying to push out more people out into the movie theaters as more people get vaccinated, especially when we get close to that 60% mark. And from what I was told, at least from what I guess read about in Nevada, once you reach a certain percentage, we might not be able to wear a mask anymore. We can actually go out and not have to wear a mask. So that will be interesting. It might actually feel a little weird that we can't wear a mask out there. So I'm curious to see who actually like embrace that, or maybe it'll linger a little bit longer, like a kind of like a lag approach, where some people will slowly start removing their masks and be comfortable around other people outside or in a close environment without a mask. So time will tell, guys. Time will tell. Now let's go and see if we can find some articles on AMC real quick. We got this article here from investing.com. AMC shares add to rally with strong focus among retail investors. Shares in heavily shorted AMC Entertainment Holdings closed up to 1.6% in a busy trading day on Friday, as one analyst raised their price target for the cinema's operator's stock, a focus in social media forums popular among retail investors. AMC's gains are forcing bearish investors out of their position, according to one analyst who watches short sellers. B. Riley's security analyst, Eric Wohl, raised the AMC price target on Friday to $16 from $13. A small increase, but an increase nonetheless, which is very, very positive. AMC stocks have been extremely volatile this year, trading in a range between $1.92 up to, like I said before, $20.36. Raising 920% by late January. They ended Friday up to 512% year to date, which is pretty insane. And of course, that was alongside GME, GameStop. So it'll be interesting to see where AMC goes, but for the short term, I definitely see a good growth, especially during the summer and fall as more movies come out in movie theaters. But for the most part, I will still kind of watch it for the most part. I don't ever see the stock ever like hitting massive, like $50 per share or anything like that. So as a long-term investor, personally, I don't see long-term growth in this. But as a short-term investor, I definitely see potential growth in this. But yeah, let's go into the next topic. The next topic, of course, is Disney. That is the 6-month history, sitting at $121, as high as almost $200 at one point. It started dwindling down for the most part in 6 months. But let's look at the 5-day history, because that's what's all about here. The 5-day history. Now, they're not doing so pretty in the 5-day history. As high as 186 to as low as 169, and on Friday it has been going up a little bit, but of course by the tail end of the day went back down some more. But that's still really good compared to where it was. I remember this stock being at like $80 at one point. Obviously, we know about Disney Plus. We know about everything that's going on. They're eventually going to be releasing the Loki series over in Disney Plus sometime in June 8th, I believe the date was. And not only that, but movies, Marvel movies coming out. A lot of people are getting excited, getting hyped for that. And of course, any of the like animation stuff that they do for like the kids, that's always also going to be a high seller. But of course, they're not doing so well this week. So let's look at some articles real quick to see what might have driven it down this week. All right, so there's like a small snippet here. Keep an eye on Walt Disney. Shares Friday to see just how happy investors are with his results, which are due to after close today, with theme parks reopening as the pandemic lockdown eases, and Disney Plus streaming services should continue to drive positive sentiments. It's kind of funny that there's like positive news here, but the stock still went down. So my guess is the reason why it went down is because people were selling some of the profits, because it was as high as $200 at one point. So a lot of like whales and big time investors probably took a little bit of that revenue and probably maybe invest into other stuff. And obviously this is positive news in the short term, where like the article says, parks will be opening up, and then we'll have more Disney Plus like streaming content coming up, and a lot of it is really, really good. We actually did an impression of Bad Batch Of course, that video should be coming live pretty soon this weekend, if not already. We'll have an annotation on top if you guys are interested in watching that with myself and Chris Sora. He has a lot of content coming on Disney Plus. I potentially see this being a great buy, even at its current price. But let's see if we can find another article that might explain a little bit more on the downturn, at least for this week. All right, according to Yahoo Finance, Disney stocks slide. Company is in the middle of recovery. The shares tumble on Friday after the reporting disappointment fiscal second quarter results. Okay, that explains why the downturn, because obviously with the pandemic, of course, the parks are closed. I think a bulk of their money comes from the Disney parks. Obviously, they're multi-entertainment industry, so they have movies, they have TV shows, they have the parks, and much of that in the entertainment industry. They reported a disappointing fiscal second quarter results. But as this article mentioned, it's in the middle of recovery. You'll be seeing in terms of the stock performance of Disney over the last 12-15 months has essentially decoupled from its earnings. According to Greenfield, the weak Disney Plus subscription additions were the key catalyst for the Wall Street's negative reaction to the results. The streaming platform has been a major source of strength for the company over the course of the past year. Of course, the reason why people are at home, similar to like Netflix, more people going out and about, so they're probably canceling their Disney Plus subscription and actually going out watching movies in theaters or going into the Disney parks. Eventually that will kind of like feed itself and start recovering, but for the short term, that is what's happening. Yeah, the streaming momentum, however, appears to be decelerating this year. And as we saw from the history, even with the drop on Friday, shares of Disney are still up more than 60% over the past 52 weeks, which is huge. Yeah, as I mentioned before in our previous video, like Disney, Netflix also posted weaker than expected subscriber growth in its latest quarter, suggesting consumers were already being lured away from at-home activities like streaming during the post-pandemic recovery. Like I say, in the short term, that's going to happen, but eventually it will recover. And as a long term, it's difficult to surpass what it previous was, especially as more great shows come out for Disney Plus later in the tail end of the year. And with the mention of like Netflix, obviously competition is going to be very fierce with other streaming platforms arising, and it's going to be a key disadvantage for a lot of the streaming platforms going into the summer and the fall season. Some examples include ESPN Plus, Hulu, Discovery Plus, and so much more. Peacock is another one. So that explains the downturn here. Let's move on to our next topic here, which is another one that's kind of weird, but it's been going up, and that is Zoom. Zoom actually spiked way up on Friday. There was a massive sell-off on Thursday, going as low as $277, and then as soon as Friday hit, peaked right back up as high as $307. I want to say it's related to the earnings report, but let's go and see exactly what it might have spiked it up, and do we continue seeing this growth throughout the summer and fall. Now here's an article that we found right here. JP Morgan CEO just made a comment Zoom investors need to see. Obviously, for those that may not know, he's the most admired of the Fortune 500 CEOs, according to a survey of top executives in 2020. Now, the future of work. This is the big one, of course. If you guys recall, Zoom was huge. Skype to some degree was also pretty huge. Anything that involved using like a communication device to talk with other people at home, with other employees, other co-workers, remote work isn't always an option for every industry according to this article, but it still provides challenges even when it's feasible. For instance, teamwork becomes much more trickier when employees are in different physical locations. But remote work creates opportunity. It gives people the freedom to live whatever they like, structuring their job around their lives, which can lead to a happier, more productive employee. Currently with my own job, as I work IT, a lot of my work could actually be done at home. I can just remote into basically my client's computers and stuff like that and actually do stuff at home. As an employee, you definitely feel a lot more freedom, more happiness, because you are in your own little workspace here. You have your pets, at least for me anyway, you have your pets kind of around, you can just kind of pet them. Even though some people might think of that as a bit of a distraction, to me, I feel like just it adds a much more freedom, much more happiness into my work, and I just feel like I can do a lot more when I'm given that much freedom. Now, not everything that I do requires me to be at home. I still have to go into my work facility. I still gotta do work in the buildings especially when the system is down or the server is down. I have to actually physically go to the place and actually fix what needs to be fixed. A lot of businesses are starting to realize that we really don't need that many people in the building physically as we first thought, especially as you mentioned, especially with IT related, especially with like customer support, you don't really need to be in a building to actually do certain works like that. But it doesn't mean that every job is like that. Some jobs require you to be there. And of course, nurses is a big example. Can't do your job from at home. There has been other avenues where, like, if you want to talk to your patients or talk to your doctor as a patient and about certain symptoms that you might be having via teleconference or like face-to-face conversation like this, via Skype, via Zoom, for example. But not all of it, of course, is that. But I think a vast majority could be that, and that's been helping a little bit of the stresses of like having so much people in the hospital at one point to get seen for something that could be just talked through a Zoom conference. You also mentioned here about corporate travels. Because of the way things are with teleworking and stuff like that, there's been less travel, but of course that might continue onwards. Like there'll be no reason to like a corporate travel out to a meeting like across the states where you can just do it via Zoom. Sometimes I feel like it is better to have that face-to-face conversation because it feels a little more personable than via a digital avenue. But that might be an option for some companies to just cut corporate travel out because there's no need for it. Just have a Zoom conference and boom, get business done much more quicker, and you just have to wait for the time difference. But for the most part, I believe Zoom conferences has been quite positive, especially during that pandemic. But at the same time, there's also cons with that as well. Like, I like traveling, I like going to see other places, and I feel like that also adds a level of like happiness for employees as well, to see their clients or their other employees from across the states in a face-to-face conversation versus talking through a digital means. And that I feel like that human connection is always going to be, to me personally, outweigh some of the digital aspect. But of course, it kind of depends on how the company sees their business and how they want to approach it in 2021 and onwards. I guess you can just make your own assumption on that, whether you believe Zoom will continue its growth or kind of simmer down a little bit, especially as more people are willing to like travel more, people are actually willing to have that face-to-face interaction, that handshake interaction. And of course, with more people being vaccinated, less people wearing masks, gets passed along to, yes, we probably don't need to do a Zoom conference, and it's beneficial to actually see them in person. But of course, we'll see how that goes in the time to come. Now, the last topic I want to talk about, the big last topic I want to talk about, of course, is Sony. Not specifically the company itself, but what they might potentially get out of this. And that, of course, is a big one, known as Discord acquisition. Now, Discord, for those that may not know, is a communication similar to, like, I guess you can say Skype or anything like that. Initially, it's like kind of made for gamers. For example, let's say I want to play like a certain video game and I want to collab with other gamers. A lot of gamers will actually come together via Discord to chat or do a FaceTime, or even like they can pass digital projects together. Like, for example, video projects, they can kind of pass links to each other and share their screens, for example. A lot of that integrate into one community-based aspect. You can actually create your own community as well in Discord, which of course the Study Boys community channel does have. Link down below. Cheap plug, yes I know, but you can always join our study community in the Discord. And what makes this news very, very interesting is, of course, that Sony expressed interest in buying the company. Not only that, but of course Microsoft themselves has it as well. Now, Microsoft already has Skype technically in their Xbox, or as their, I guess, communication with other gamers. But quite honestly, a lot of gamers don't use Skype for that interaction. They've had to use Discord. And it kind of feels more game-centric because Skype feels more like too businessy, too formal. So it might not be something that gamers like, which is why they like Discord. This was the big news last week. So I wasn't able to cover this last week due to emergency, but for the most part, this is what's happening. PlayStation acquires a minority interest in Discord following Microsoft's buyout interest. PlayStation has announced that it has made a minority investment into Discord as a way to build a relationship between a popular online chat service and Sony. They announced a partnership in a short blog post, though aside from disclosing its minority stake, not a lot of details were shared. According to Ryan here, empowering players to create communities and enjoy shared gaming experiences is the heart of what we do. I guess that's a better description of what Discord is. Discord is an online communication service where people can conjugate in user-created channels for text, voice, and video chats. These channels can be focused on hobbies, created by a friends group, or hosted by an official video game company. Discord has reported 140 million users per month around the globe. The news of the PlayStation Minority Stakes comes off a heel of reports that Discord has halted talks of the buyout of 3 potential buyers, including Microsoft. Now, this was reported that the tech company was ready to offer $10 billion for Discord, but those negotiations have been put on hold with potential to be rekindled in the future. That's huge, $10 million for Discord. We can talk about the pros and cons all day, but I personally don't think Microsoft needs another communication. If anything, the biggest fear that I have, if Microsoft does end up getting Discord, they're just gonna kind of mesh that together with Skype, or maybe deactivate Skype and make Discord the main. Because when Microsoft first bought Skype, there was a lot of promise and hope with Skype. With that, but of course they kind of put that to the side. They didn't really invest much into Skype, and of course now you see why a lot of gamers don't even like using Skype because of that. Now if Discord was embedded inside of like Xbox or anything like that, I feel like that is also going to go to wayside and it won't be as good as it used to be. So, but I feel like if Sony ends up getting it, I feel like they will actually put a little bit more heart and investment into it. Of course, that's not always guaranteed, because there has been plenty of Sony projects that came and gone. Vilo, for example, if you guys remember their laptops, their Sony phones, of course, wasn't very good either. When you compare, I guess, two evils, if you want to call it that, Sony has a better outlook of it. Now, the biggest concern I can see with Sony buying them, of making like exclusive, like for example, you can only use it like your Discord in Sony. You must have like a Sony account or something. You integrate your Sony account into Discord in order to use it. Similar to like how Facebook, once you have a Facebook account in order to use the Oculus. News like that can definitely hurt the community as a whole if they make stuff like that mandatory in the Sony side of the house. But if they keep more of like a hands-off approach and just let Discord do its own thing, I can definitely see a lot of positive growth with that. It's one of the things where time will tell, and to see how that goes in the long term. I'm very curious to see what you have to say, guys. Let me know in the comments down below if you guys agree with it. If there's anything that I might have missed through in the articles that we talked about in today's video, let me know in the comments down below. And of course, guys, thank you so much for tuning in. And of course, I do apologize yet again for not having a video last week. But of course, we try to make this weekly, but it's not always guaranteed to be weekly, but we'll definitely try to make it weekly. But as I mentioned, that's pretty much all I got, guys. I hope you guys enjoyed this video. Definitely, if you guys haven't already, be sure to hit that subscribe button and for more future content here in the TSLA Boyz community channel. Not only do we talk about stocks, we also talk about gaming news. We also talk about entertainment news, movie, TV shows, streaming platforms, all that good stuff right here in this channel. So definitely consider giving us a subscribe right here. And of course, more future content here in this channel. And as I mentioned numerous times, I am not a financial advisor. I can't tell you what to do with your money, but of course, these are all my opinions, and we're just gonna base it on the data that is provided us for today. And of course, big shout, of course, to our sponsor of today's video, Public. Guys, check it out, link down below. Grab your slice of stock up to $50 worth of shares from either Tesla or any of the topics that we talked about in today's video. That's pretty much all I got. We'll definitely see you in the next video in the weekly Studly Stock Support with your host, none other than Talos. Until next time, this is Talos signing out. Later, guys.